You've got lots of real estate questions. Should I downsize? What improvements do I need to make before I sell? What will Connecticut's real estate market be like in 6 months? It's time for The Real Estate Show with Pat Civitella. He's got your answers. Call 203-333-9422. Now, here's your host, Pat Civitella.
All right. Hello to everyone, and good evening, and thanks for tuning in to The Real Estate Show with me, your host, Pat Civitella, with over 35 years' experience in the real estate investing game. This show is about creating long-term wealth through real estate investing and producing passive and residual income in real estate. I am going to share with you my knowledge and offer some guidance of inside knowledge that can be very beneficial to the person just getting started. I can also show you how to develop and generate a secondary and primary income with real estate investing. I always reiterate when we start the show is I try to tell the audience that you have to buy assets, don't buy liabilities. And a lot of people don't understand that. I've talked about it over and over on the show, and unfortunately people think that their single-family home is an asset. But unfortunately, reality is it's not an asset. It's a liability, because what people don't realize is that every month that property costs you money, whether, 80% of the people have mortgages on it, insurance, taxes, maintenance, water, sewer, the list goes on and on and on. So those are all liabilities. It's not an asset. So the premise of this show is that I want you to be able to invest in real estate, get enough money from the real estate to pay for a liability or, the existing home that you're in or whatever. And that's how I started in my career. Is my goal was from day one is to buy I think I bought 4 different properties, multifamily properties, before I bought my single-family home, because I wanted to set up enough money coming in from those properties that it would pay for my mortgage in my home and allow my wife to stay home and raise our children. And I accomplished that, in a relatively short time. First, we want to get into our sponsor for the show, and then we're going to get right into our guest. I want to thank 1-800-MR-JUNKER for sponsoring the show. 1-800-MR-JUNKER has junk removal made easy. They will come and take the good, the bad, and the ugly, and no need to do anything except point whatever you want gone or give them instructions, and they'll take out either one item or complete house or business clean out. 1-800-MR-JUNKER is ready to serve you. Been serving Fairfield and New Haven counties for over 15 years. Please call them and call our friends at 1-800-MR-JUNKER. Mention the show, mention Pat Civitella. They will give you 10% off your first job. And they would also offer same-day service. They're also a tub removal specialist. And they also offer free junk car removal. Again, it's 1-800-MR-JUNKER. Call them for your next service, and you'll be happy that you did. Okay, so we're going to go right into my guest, which is Sam Ettinger, and he is he's in the property management business, and he runs his company, which is called Ironclad Property Management, right?
That's
Ironclad.
correct.
Okay. So I'm going to go right into Sam is going to give a little bit about his background, and he's going to go right into his business and his company. And he's going to start out with what we talked about before the show is he started out as an investor, correct, Sam?
Yeah.
Okay, you could go on from here, Sam.
Yeah, so I'll take it back a little bit further. I grew up in real estate. My dad, just like you're saying, generational wealth, and I saw it firsthand. My dad was a teacher. He had 5 sons. And as a teacher, he now has a multi-million-dollar real estate portfolio. And so pretty much I saw the fact that if you continue to work hard, and in my dad's case, he self-managed and continues to self-manage today. And we saw that he could make all the rents paid. We were able to take some vacations. And now, after doing this for 40-something years, he's got a second house, all on a teacher's salary. So you don't have to make a ton of money. You just have to have persistence and perseverance, and you actually can make great wealth in real estate. So fast forwarding now, my brothers and I all saw this, and we started buying real estate. I moved to San Diego after college and came back and started buying real estate about 2012. And I was an engineer. I was making more money than my dad was when he retired as a teacher. And so I basically decided, well, I'm going to try to, like my dad, start buying real estate. And so we ended up buying my first property, and my wife and I, in about 2012. And, and ultimately, since I was working a W-2 job, I really didn't want all the headaches of tenants and maintenance and all of those other things that are so important to successfully operating a property. And so my brother actually was the first property manager that I hired. And the goal of that at that time, this is back in 2012, the goal at the time was to make a couple $100 a month on each property. It wasn't to make huge amounts of money.
Correct.
Because what you'll find, and I'm sure, Pat, you'll corroborate this as well, you don't really make a lot of money the first couple of years, right? You have a lot of debt service. You've got a lot of deferred maintenance. You got to make this thing start to operate a little bit more smoothly like clockwork.
Correct. And like, I'm sorry to interrupt,
no, please do.
But and like I've told my audience several times, is you have to put a lot of sweat equity in order for these properties to start cash flowing. And the number one key is to buy the properties right, which, in today's market might be a little bit more difficult. I also wanted to ask Sam is, how did your dad get started?
So my dad actually, he's a teacher.
Right.
He's actually a shop teacher.
So okay.
He's always been around wood. Some of his first experiences was he built houses like in high school and things.
Okay.
So he did it for years and years and years. And my dad did everything wrong with respect to buying properties. Had a fascination with barns instead of properties that really provide, like you're talking about, assets and liabilities. I don't know, like barns can kind of be an asset, but they're kind of more of a money pit. No one ever sees them, the true value of them, and then you have to maintain roofs and paint and all these other things. So did a lot of things wrong, but what he did do right was he always was able to maintain the properties, self-manage to save a little bit extra money, and then he always was reinvesting into more and more properties.
And I want to interject. Can't even talk tonight. Introject. Luckily, this is pre-recorded. So I want to interject there. I'm sorry, I forgot what we just said, because that was a good point.
Property, barns, my dad.
Cash flow. What was the other one? Well, you just mentioned something else that I wanted to highlight it.
Continuing to persevere.
You say your dad was doing everything wrong.
Yeah.
Oh, about barns and stuff like that, or I forgot what else.
Yeah. So just I'll continue with this.
Yeah.
So he did everything wrong.
Yeah.
Basically, he never really understood cash flow, net operating income, any of those type of things. That's really, really common to me and more sophisticated investors.
Right.
And so he had this fascination with barns and beautiful things. But the truth of the situation is, even when you buy bad. And, he was subsidizing these properties. He was buying it when interest rates were 18%. And he would tell me, Sam, if I only have to put in $200 or $300 a month, in 30 years it'll be paid off.
Right.
We've been spoiled for a while where we've been able to actually make good cash flow from day one.
Right.
But this was his philosophy. And what I realized from him was, if you hold something long enough, it makes something that was maybe a bad purchase look like a genius move.
Right.
So some of these properties he bought for 30 years ago for $100,000, $180,000 with 30 acres of land in a good part of Middletown, Connecticut, and now this property is worth $2 million, $1.5 million. Right? He just held long enough. Land continued to go up in value because it's a scarce resource, and he made it. So for you listeners, even on a teacher's salary, you can end up building a real estate portfolio that's worth millions if you're willing to persevere.
It's funny because that it just came to mind what I was talking about. That your dad being a teacher. The other day I listened to this a podcast, and it's a famous guy on the radio also. I don't want to give him an extra plug, but anyways, he was saying that they interviewed 10,000 millionaires, and there was 3 different categories what their professions were. And teacher happened to be one of the top 3.
Wow, that's crazy.
And I was just shocked by that. Teacher, and I forget the other 2, but that just stuck in my mind. And going back to what you're saying is, you don't have to come into this business having a multi-million dollars. On a teacher salary, that was it. Is what when we were talking about, he kept reinvesting.
Yep.
That's the number one key, because now when you're reinvesting, you're actually getting compound interest on your own money, because you keep taking that money, reinvesting back into other properties over and over. And then, again, this business, this real estate is a long-term game. It's not a short-term. There's plenty. I know Sam is familiar with a lot of different flippers out there, but that's not where the money is to be made.
Sure. Yeah, so my dad, I think, has sold in his entire history 3 properties. One was to me, one was to another friend of the family, and one was a property in Hartford. So tells you something about buying properties and holding them forever.
Absolutely.
And so I agree with you, Pat, 100%. Like that's where the generational wealth comes from, is continuing to hold the properties. And it's because they, over time, they will appreciate in value naturally. I mean, you guys, your audience, I'm sure, has seen the run up the last 3 or 4 years. Like we were sitting back, like not seeing significant appreciation, but the last 4 years have been crazy, where it's gone up, I don't know, 30, 40, 50%, right? And, a lot of people think that the housing prices might come down, but I don't really see it happening because the cost to build just keeps going up and up and up.
The cost of labor and materials just keeps going up and up. And to me, I just don't see it. I just got back from Florida 2 weeks ago, and the building that's going on down there is just mind-boggling. And I'm thinking, how could prices could possibly go down?
Yeah.
I mean, what's your opinion? I mean,
no, I what I really believe is the level of the housing prices will be ultimately determined by what it costs to rebuild.
Correct.
But so many people say, well, it's supply and demand. Well, I agree with that. But the problem is that if you can't make a return because the rents are not high enough, then builders are not going to build until the rents go up, and then it's justified in the building.
Right.
And so I actually think that Connecticut real estate is going to continue going up 5% year over year for the foreseeable future. And not a lot of people are saying this, but like I don't, with the way prices are now and the cost of building, I just don't see any other way for us to get to a point where people are incentivized to build again in Connecticut.
Absolutely.
That's just me.
Yeah,
so.
and it all goes down to, like you were just saying, is it has to be profitable for everybody. It has to be profitable for the developer, for the builder, and so forth and so on. So if the numbers don't work, it's just not going to happen. And then as you see, the inventory is so low. I was looking on the MLS the other day, and it's like, we have 1 month's worth of supply. I mean, it's just crazy. And then people are getting like 98% of the asking price. I mean, I haven't seen that in probably 15, 20 years.
Yeah, it's been crazy. I remember, and so going back to my story back in 2012, 2013 when I was purchasing, like. It was a completely different market. I remember I was buying real estate and everyone was calling me an idiot. They're like, oh, you're so dumb. I was buying single-family homes. I bought them for $80,000 a pop. I was like, you can't.
That was a score.
Yeah, you can't build those.
Right.
All they needed was eventually needed a roof, some paint, and flooring. And I would get them for $80,000. And I was like, you can't build them for that much. With what it currently is, you can't build them back. And so I said, it inevitably has to go back up, right? So that's what I was buying. But I was buying it even for $80,000 with an expectation that I was only going to make $200.
Correct. Right.
But and a lot of this was based on me evaluating the deals, being more sophisticated than my father, and running the numbers and putting the things in. And I did price in property management, because I was working a full-time job, and I didn't want to have to deal with the tenants and deal with all the headaches. And so my brothers, like I continued the story, my brothers ended up, I was their first client. And so they started a property management company. My brother actually operates one too, called Robert C. White and Company. So I run a property management company in Connecticut.
I didn't know that was your brother.
Yeah, it's my brother.
Oh, okay.
Yeah, so
that's a pretty big company.
Yeah, we're both doing well. We both kind of specialize in slightly different things. I'm more focusing on investors that are strategically trying to hold long-term. His is more what we consider to be what's called accidental landlords. They would be someone that maybe due to a parent passing away and leaving an inheritance, they don't really want to sell it, or maybe they move to another state, but they might want to come back. So it's a lot more of an emotional transaction than a strategic transaction. But like I priced it in the property management because, I didn't want a second job.
Right.
My wife and I have 6 kids too. We
God bless you.
Thank you. I definitely need the blessings. But we do a lot of philanthropy with our church. We try to be active. I'm flipping. I'm doing a bunch of stuff. So ultimately, when I was an engineer, that was my full-time job, and I didn't want to come home and then have to have a second job. And so seeing my father and how he did it, I just priced in property management into the purchase that I did, and then. Until I decided to run this property management company, quit my job, and start it in 2018, like I was just paying my brothers, 10% to run the business, to run it, and I was still cash flowing.
Right.
So you can do it. It's harder to do now, but if you find good properties, if you do the strategic fixes to raise the value and to raise the rents, and then you operate them tightly, you can do it. You can do it really well. And now, because of the fact that I've been able to sit in this market for the 10 years, a lot of the single family homes that I was renting for maybe $1,200-1,300, now I'm getting like $2,300.
For a single family home?
Single family home that I bought for $100,000, I'm getting $2,300.
Wow. And what area? That's the Middletown area?
Yeah, I'm mostly in Middletown. That's where I grew up.
Okay.
And so I own Middletown, Portland, Cromwell.
Okay. That's a great area. I love that.
They're all great areas. Yeah,
great area.
Yeah.
I brought Sam on specifically to tell the audience that you can be an investor and you can have a company run your properties like Sam's business and still make some money. Obviously depending on what the cash flow is. My criteria always was, and I got started back, when probably you were, I don't know if you were born in 88, but.
I was.
Okay. That's when I got started. So back then, the interest rates were 11, 12, 13%. But my criteria was always when I bought, I wanted guaranteed cash flow.
Sure.
Compared to, like you were saying, your dad was buying stuff that costed money sometimes.
Absolutely.
But he was looking long term. But my criteria, in which I was able to get back then, is to make sure it cash flow from the get-go. I mean, I bought properties that didn't cash flow just due to the fact that one property comes to mind, which I still own today, is 4 apartments in the storefront. Just it didn't cash flow at the time because there was 3 vacancies.
Yeah. So
I knew it was only a matter of going in there, doing cosmetics,
sure,
maybe a month or 2 or 3 months. And as soon as I turned the property around, I was cash flowing, $1,000, $1,500 a month.
Nice.
So, I mean, in today's market, it might be a little bit difficult, but I also want to bring another point in that I want people to understand that Connecticut's a small state, but there is still certain pockets, which I'm sure you'll agree that you can buy properties and still cash flow. Is that correct, Sam?
Yeah, there are some places you have to look for them, but yeah, it really depends on how much money you're willing to come to the deal as well, right? So
correct.
And Pat's sophisticated, and so I don't want to go over the audience's head too much, but basically it's an investment like anything else. And so if you put more cash on the deal, then your debt is less. And so your debt service, the interest payments that you make is less. So you can definitely do that. Historically, I've always wanted to cash flow when I was, 20% or 30% out of pocket. But nowadays, it's probably you would need to be more like 50% out of pocket. But there's still places that you can find it. But to Pat's points, most of those places that you find would probably need a lot of sweat equity. And so that's what I always suggest to people is when you're buying property, you really kind of want to focus on one of 2 areas. You want to focus on properties that are really bad, that need a ton of work, fix them up really nice, and then rent them and get great tenants in there. Or you want to basically, and usually you buy those in cash, and then what you would do is you do a refinance after you do it. So you can pull most of your cash, if not all of it, out and basically then still cash flow. The other alternative is to buy a property that they call as turnkey. Basically, some other person has renovated it, and it's going to be operating for you. The benefit of that is when you get into no man's land between where it's really good and really bad, you end up pulling a mortgage, even if it's let's say an FHA loan, the 5% down. Ultimately, then you might have to put $20,000, $30,000, $40,000, $50,000 into it. And now, where are you getting that money from? And how are you going to be able to fix it?
Right.
And so it's a lot more difficult in that situation. So, my concern for the future, and it could be an opportunity for your listeners, is that there are most of the purchases we talked about. There's only about a 1 month total supply on the market.
Yes.
A lot of the people that are buying it are owner occupants, and that includes for 2, 3, and 4 unit properties. Historically, 2, 3, and 4s were more only for investors, and FHA loans were for single family homes. Well, people that want to buy homes and don't have a lot of money to be able to buy it, because of how the interest rates have gone up, they can't cover the debt service.
Correct.
And so then what they do is they buy a 2-family, because a 2-family gives them an income that they can then use against the debt service in the calculations with the underwriting. So, but now they can't afford 2 families, so now they go to a 3-family.
Right.
Now they can't afford 3 families, they go to a 4-family.
Right.
And you can't go to 5 because 5 is considered to be commercial.
Right.
So in this situation, a lot of these people that don't have that much, we call them reserves, reserve funds. When you don't have a reserve fund to do this, your one roof or one heating system or one major repair, one vacancy away.
That's correct.
Like Pat just said, he had some vacancies on his units, 3 units, and he wasn't making any money.
Yep.
Well, now you have these. If you have a situation where a tenant moves out and you expected to need that money to cover your debt service, well, now you can't. So I actually think 5 years from now, or even shorter, we're going to see a lot of foreclosures on the market from from people that were buying FHA, buying 2, 3, 4 families that really didn't have sufficient income to cover all of the expenses that were going to happen. So,
and that's exactly one of my first points when I started the show is that people don't have enough cushion or enough reserves. Like you say, they get in with like the minimum, the minimum they have, and then like you say, the roof goes, the hot water heater goes, and now you can't get caught up, and that's what you're saying is I think a lot of people are going to have problems. But I wanted to make the point, Sam, is like the different geographic areas here in Connecticut. Like I've told my audience before, is I think if you go past north of Watertown or Waterbury into that, let's say, Torrington area, Winstead area, I think there's still a lot of bargains up there. I've seen them on the MLS, like 2 families and 3 families for like 200, 300,000, and maybe even a little bit. But like again, going back to Sam's point, is you have to make a decision what you want to do. If you want to put all that sweat equity in, that's where you're going to get the biggest return.
Sure.
Because once you put that sweat equity in and you buy a property, let's say a 3-family for $200,000, and then in 5 years it's worth $400,000 and so forth and so on, and then the rents keep going up. I just wanted to see what your opinion on that was.
Yeah. So I have heard about Torrington and it continuing to go up. What I understand is there's not that much industry, and so maybe the vacancy rate's higher. I think from what I understand, there might be a lot more drug use in those areas. And so you want to what we always advocate is when you're buying properties, you really only want to buy properties that you would be comfortable
That's correct, 100%.
Moving your family into, right?
Yeah.
So it doesn't, like I have 6 kids, so obviously I'm not moving my family into a 1-bedroom.
Right.
But if I look at it and I said I was a single guy, would I feel comfortable living here? And if the answer is yes, then and the numbers work, you should buy it. So definitely advocate for, if you want to be in Torrington or Bridgeport or Waterbury or Hartford, some areas that are historically considered to be a little bit more rough areas of the state.
Right.
Like,
a little higher risk or...
it could be, but again, if you're comfortable with the risk, if you're comfortable there and you feel like it's good, well, other tenants are also going to feel that way. But if you don't feel safe, if you don't feel good, then most people are also not going to feel that way. So what happens in those cases is you only can rent to people that are desperate, or have other reasons to live there. And so a lot of times you'll have higher vacancy rates. You might have what's called higher bad debt because maybe people won't pay you the rent regularly.
Right.
And so again, I think there are still areas, the areas that I would say that you could still probably find some cash flowing assets that I'm more comfortable, places, and that I know, places like Bristol.
Right.
How about
that Plymouth, Terryville area?
Yeah, some places in Terryville, places like that. New Britain, I still advocating people to buy in those areas.
Right.
Historically for me, Middletown's been good. It's a little bit higher now, but there's still at times that you can buy deals if you keep your eyes out for them.
Right.
To tell your audience as well, one of the things that I really look at is if there is a deal, you want to get there like first day. You want to look at it first day and get an offer in.
Absolutely.
Because the more offers you put in, the more likely that you're going to find an opportunity to purchase. And so that's something that you want to be regularly doing your due diligence, finding deals,
absolutely,
underwriting them, looking at them, taking a look at the properties, making offers. Because what that'll also do is make you more comfortable. If you're getting a lot of offers that are declined, that's actually a great thing because that means you're not overpaying. So that when you do get under contract, you know that you're going to actually get it for a good price.
If you have any real estate questions, you want to reach me directly at my office. My number is 203-736-2484. My email is patcivitella, and I'll spell that out for you. That's PATCIVITELLA@gmail.com. If you have any questions, because I know a half hour is a very short time to call in, and sometimes we got so much information to cover, just like with Sam now. We only got, I think, a couple minutes left. But just call my office or email me, and I'll definitely get back to you. What is your feelings towards the future in real estate? You're much younger than I am. I've been around a lot longer, but I see it, to me, it just seems like this area, the Northeast in general, it just seems it's just going to keep going up and up. I don't know. What's your feelings on that?
Yeah, my general take is that it's very difficult, like we talked about earlier, to build property. Connecticut historically has not built a lot of property. We've actually had an exodus of people from the Aetna headquarters, General Electric headquarters, to the Boston areas. And so we've kind of, for a while, we've had a net migration of people out of the state. We've had an influx of people from New York and Boston areas coming into Connecticut. And so like I'm optimistic for the first time in a long time that we're going to continue to see either price appreciation, definitely stabilization, and we might end up having some development that occurs. The one thing about it, though, is you can't just turn on development overnight. Right. So
it's a long haul to get started with any type of development.
Correct, for multiple reasons. Yeah. One of it that people don't really realize, it's not just about labor and getting it done. It's approvals. It's the building departments are completely understaffed to do the development that we need to do. Yeah. And so, like, if they're not going to scale up their building departments to be able to do all the permits and inspections and all the things that are needed for the developments, it's going to stagnate and stall as well. And so, for those reasons, I tend to think housing prices are going to continue to go up over time, and I think rents are going to keep going up over time until the housing prices justify the rents, or the rents justify the housing prices.
Right.
So I'm bullish on Connecticut. I'm continuing to try to find opportunities to purchase. And I've been purchasing lately. I bought a 2-family and a single family on one lot in Portland about 3 or 4 months ago. I'm buying a flip right now in Cromwell. We're looking to purchase some other properties in New Britain and Middletown with my partners.
And now, how are you finding these, Sam?
I don't know if your audience is familiar with a website called Bigger Pockets, but there's a place called Bigger Pockets, which is related to real estate investing. And out of the blue, this woman direct messaged me and said, I see that you're on providing value. I want to do a quiet sale so my neighbors don't know. No one really knows what's going on, and I just want to sell this property. And basically, I ended up contacting her with my partner. My partner negotiated a price, and we're supposed to have it sold, the contract closed within the next 2 weeks or so.
Oh, nice. Now, is that price, you don't have to disclose the price, but is it market value or under market value?
Way under market. When you're buying off market and you find motivated people that, don't want to do inspections,
Is the property distressed or?
It'll be a little distressed. We need to do kitchens and bathrooms and things like that. So we think our remodel budget's probably somewhere between $60,000 and $80,000. But when we look at the ARV of the property, it's about $315,000 to $350,000, so somewhere in that range. And so there's the ability for us to make good money on it.
And it's a single family?
Single family home. And so but that's what we do too is, a lot of times, and for your audience is if you're just getting new to the game, one of the things is to, they call it driving for dollars, where you look for distressed properties.
Correct.
You can put mailers, you talk to people, and sometimes you'll just meet someone. Right. And so getting yourselves out there actively, just like me coming onto your show today, it's all it's doing is spreading the message that you're trying to make about real estate. And then, I heard you on that show. I have this property. You'll meet people. You'll network.
Absolutely. That's what I tell people all the time. Every opportunity that you have, you talk to people, and that's what like Sam was saying, that you don't know where it's going to lead to.
Yeah. And just because I've been on this site and get feeling a little bit demoralized or depressed, hey, I really haven't gotten much. I spent a lot of time on this site, but lo and behold, I'm probably going to make $40,000 just doing this one transaction. Yeah. So just dividends.
Just to piggyback on that. I got a call the other day from a lady and her husband on a property in Stratford that I've been mailing to for the last 5 years. Nice. I saw them 5 years ago, gave them an offer on their property. They weren't ready. Out of the blue, she calls me up like 2-3 weeks ago, and we're in negotiations right now. I don't have it under contract, but my point of bringing that up is people think like this is like an overnight success type of deal. You have to constantly be doing stuff. And how many people would actually continue to mail to someone for the last 5 years? And I do it religiously every 3 months, 3 to 4 months. I keep sending out letters and stuff, because you have to understand people sometimes when you approach them or when you meet them, they're not ready for anything. But then they, as circumstances and time change, people say, oh, you know what, let me call Sam or let me call Pat Civitella because I think I want to do something.
Yeah. That's absolutely correct. I actually have a friend who has a lot of property in Middletown, 200-something units, and he says he doesn't call anyone back, but he keeps every single one of the flyers.
Right.
And then when ultimately he's ready to sell, he's just going to call everybody to try to do an off-market deal. I said, give me an opportunity too, please.
Yeah, real estate is a fun game. I enjoy it. I want to thank everybody for tuning in. I want to thank Sam for coming in and doing the show with me tonight. And we'll probably have him back on again because we had so many topics to talk about, but our time is up already. Thank you, everybody, and have a great night, and God bless America. Thank you. Bye-bye.